Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. Abel Pacheco here with the Five Talents Podcast, where we discuss multifamily, commercial investments, building financial freedom through passive investing as well. So a few different topics. A lot of times we cover mindset and action taking as well. So we are here today with Mr. Jennings Smith, and super excited to have him on. I've followed or I've watched many of Jennings Smith's posts on Facebook. So if you're not a friend or if you still have some room in that contact list, Jennings, you may accept a few extra invitations from people. Man, I really enjoyed some pretty short posts, video posts, description of your deals, description of your mindset, some of your goals. And wanted to connect, and I think I think you could provide some value to our network. So that's why I wanted to have you on the show, man. Welcome.
Hey, thank you, Abel. Glad to be here. I really appreciate it.
Yeah, it's you're very welcome, and again, pleasure's all mine. So as I've followed some of your video posts, some of the content you've created, and it's really just telling your story, which I love the most. And I understand you have some pretty good holdings in multifamily real estate, and more importantly, you have some pretty big goals. So one of the ones I saw, I'm going to try to get 1,000 doors. And while you're not there today, you put it out there like, this is what I'm going to do. And that's hard to do, man. So just to even say those goals out loud, sometimes it's hard, but let you introduce yourself. Please give us a bit about, your background, and tell us where you're from and what you do and how you do it, and how you help others all the way through. We'd love to hear.
Absolutely, sure. Yeah, so I'm Jennings Smith. I'm 37 years old. I live down in the Charleston, South Carolina market, and I got into real estate about 5 years ago. My father is a realtor. He owns about 15 rental homes, so he got into it when he was in his early 40s, and didn't really have much by way of assets before that. And I saw him build a pretty good retirement for himself over 10, 15 years just through these single family rental homes. And then he showed me, hey, these are the 4 ways you make money in real estate, tax shelters, mortgage pay down, cash flow, appreciation. And this is a great way to go. And I was like, okay, sounds good. And so, I was a contractor. I got my license when I was 19. I was building houses while I was going to Clemson University. And so eventually I finally, saved up and bought a trailer. I bought a $5,000 double wide and put $5,000 in it. And I sold it owner financed. And within 3 months, the person had totally trashed the place, and I had to kick them out and start all over. And it was really heartbreaking.
Yeah.
And in a way, I wanted to stop right there because it was just like sickening. Like, wow, I had poured my heart into this thing, and pretty much most of my money that I had at the time.
How old were you, man?
Out.
How old were you?
I think I was like 29, 30 years old.
Yeah, it's a good chunk of change right then and there.
Yeah,
just
10 grand.
Out, yeah.
10 grand was a lot of money to me, and it's still a good bit of money. But I did it again. I fixed it up again, put another 5 grand into it. And this time I just sold it straight up. I was like, I'm not doing any more financing. But I did successfully do 5 or 6 more mobile homes like that, selling them owner finance, and then eventually got enough to buy my first rental. And then I bought a second rental. And then I wrote down like, hey, I want to have 1,000 doors. 1,000 doors And at the time I thought single family homes, but after talking with my banker and seeing some other risks, and I really don't want 1,000 houses. So I was like, well, maybe multifamily is the way to go.
Yeah.
And so, yeah, I bought my first 12 unit. I found it. It was just listed on the MLS. It was up in North Carolina, about a 5-hour drive from me. It looked like a great deal, light value add. It was losing money, but through some management and some utility bill backs, I could make it profitable. And so, yeah, I got that. I raised 90 grand for the down payment. The seller held the balance, so I didn't have to qualify with a bank because it was losing money. And he gave me like a 3-year note, and we turned the property around. And actually, I have it under contract now for 450,000, and we were all in it for like 260. So it was 16 months ago we bought that, and so it was a great deal
Yeah.
for the investor and for me for my first deal.
Was it one investor or multiple?
One investor gave me the whole 90,000. Full disclosure, it was my dad. He gave me my first shot at this.
Yeah. Yeah.
But,
Yeah. You got to sell, you got to
but
sell
yeah,
somebody on
exactly.
it, and it's got to be a good deal. And,
And that's the thing. My dad's no dummy. I mean, he's not just going to give me $90,000 if it's not a good deal and a good plan. And there was some safety.
15 houses. He had some experience, and he's like, well, I know what a good deal is. You don't do that many
Exactly.
deals without knowing it's a good one.
Exactly. So, so yeah, we got that deal done, and then Facebook started marketing to me now that I'm this big time multifamily investor. And Tim Bratz, who does Commercial Empire, started seeing his ads and seeing like, wow, this guy is doing bigger deals. He's getting a big piece of the equity. He's paying great returns. He's returning investors' money in 18 to 24 months and forcing appreciation. And that is right up my alley. Like, I really like the value add, taking something that is losing money or not doing well and making it do well. And so I went to his event, and at the event, I mean, it was like my mind blew up. I mean, this guy, I think he had 1,500 units at the time of the event. And just 3 years ago, he just only had some single families, and he had just shifted his focus to this, had grown exponentially. And that was about a year and a half ago. I went to that event, and now he has like 3,900 units. So, I mean, he's still on fire. And so when I was there, my cousin and I, who went with me to the event, he had found a 63 unit in Charleston area, and it looked like it fit the model that Tim would do. And so we ended up getting close to putting that under contract, but it didn't quite fit Tim's model and it didn't work out. But I met another person at the event who could be a loan sponsor as well, a very wealthy individual, networking, and he came down and partnered with me on that. And so we were able to do that deal. And we did an 18 unit with the same guy. We did a 41 unit. And then, I mean, we were rolling. And bought up 2 mobile home parks and got to about 192 units by the end of 2019. So I went from, a 12 unit and 5 or 6 trailers to 192 units in a year. So the growth trajectory really took off there. And then, this year, like you saw in my post, we've been working hard, working deals. We have a lot of stuff that's under contract. We have a lot of stuff that's about to close. We have not closed anything with COVID. We do have a 208 unit in Tulsa, Oklahoma that is closing on the 28th. Got the loan commitment, got the final commitment. Yeah, fingers crossed, I say. And,
have faith, right? I've heard you talk about faith a couple of times, so I feel comfortable there too. Good stuff.
Yeah. So that is in the pipeline. We've got a big deal in Alabama, 392 units, and a 76 unit in South Carolina, a 34 unit. All those are closed. Those 2 deals are closing the end of the month. So I should get a big chunk towards my 1,000 unit goal by year end there, if I can just close those deals and find 1 or 2 more. But yeah, it's been a very fun ride and sticking to the criteria, being diligent on, like, we've got to get that 15% at least cash on cash return. And we've got to get the refinance done in 18 months to get it back to our investors. And then they've got to make 15% cash on cash plus have equity in the deal. So, we're
Mhm.
shooting in the mid 30s for our internal rate of return for our investors there. So if we stick to that criteria, keep buying stuff wholesale, I think that we can avoid a lot of risk versus, overpaying and hoping that you'll be able to push rents even higher when they're already, right to here. So we're buying stuff that's way under market, and we got to put some work into it, but there's just a lot of value to be created there.
All right. Well, all of that sounds awesome. Let's dive into a couple of these points, and really just kudos to you for taking action. That's a big. Those are big jumps, big moves, big leaps in a year or two, and it's a big leap to do your first deal. Then you pony back up after someone messed up your house, your first investment, $10,000, 5K in the buy, 5K to renovate. That's a lot of times where a lot of investors would stop and they would literally say, "Oh no, I've tried real estate and I'm not going to do that." I've heard a horror story from my friend Jennings, and he lost 10 grand, and I don't even want to start, one of the two. Right. And so you just kept going. You realized, hey, this is your dad probably saw him, hey, 15 times, right? 15 houses. And so got to keep going. Right.
Yeah, I take that for granted, but it's like there's a lot of mindset that can be built by your parents, whether for good or for bad,
Mm-hmm.
and I think I'm very grateful that he was a risk taker, had that entrepreneurial spirit, which kind of encouraged me, like, you can do this, you can do this. Because a lot of people, that's where they stop, is they just never even think this is he can do that, somebody else can do that, I know you can make money in it, but I can't. For whatever reason, they don't believe, and that's the first thing. You're never going to do something you don't believe you can do.
Agreed. And while we're on the topic, do you know if was your grandfather, did he invest in real estate also? Or was your dad like first gen and you're second gen, or?
No, my grandfather was also in real estate and insurance, so he made some very good real estate investments.
Yep.
He bought right after World War II. He came back in 1940, whatever, and he bought a beachfront lot on the Isle of Palms, which is a very nice area around Charleston, for like
Yeah.
$500. And lots on Isle of Palms are now like over 2 million. So it was a pretty good investment. So,
He made a good investment.
and our family still owns that house, still in the family. So,
Yeah.
and he bought 500 acres of land way out in the country at the time,
Yeah.
which is now 10 minutes from Somerville. And so yeah, I saw the real estate investments my grandfather even made as very wise.
And, I wonder if your great grandfather, right? The point that I sometimes hear a couple times is, "Oh, I'm self-made. I did it myself. I created it." And I agree with people's hard work, right? And I go, "Man, you absolutely did it." But, I wonder if your dad, if your grandfather, and these things kind of soak in over time, just like you had mentioned, whether consciously or subconsciously, you're like third gen real estate investor. So, man, it's kind of in the blood, it's in the mindset, and you're like, I'm going to go make it happen. And it sounds like it's awesome. It's definitely a trajectory. One couple properties, 500 acres, good job. And then, 15, and now 192, on a path to 1,000. That's awesome, man. And you have children at the house too, right?
I do. I have 4 kids,
Yeah.
married 13 years, and yeah, I'm working with my boys to try and teach them how to make money while they sleep
Yeah,
and
man.
get away from that gravity. I think that there's it for better or for worse, most of us are trapped by this $80,000 or $60,000, whatever ceiling of, like, I've got to make $60,000-$70,000 a year just to keep the lights on, to pay
Hmm.
my mortgage, to pay my bills, and you can't think or do anything else until that objective is met. And so a lot of people just stay right there. I mean, their whole life, like, maybe they make 90,000 or 100,000, or they get a little bit better, then they put a little bit away, but they never escape that gravity or achieve the velocity to get beyond that. Because when you do get beyond it and you have time to think and you have time to invest and you have time to plan and you have you don't have to spend 10 hours a week or 10 hours a day just to put food on the table. That's where you can really get that flywheel going and build that momentum. But it's hard, because you got to like work 10 hours and then go work another 4 or 5 hours, to get that momentum started. And that's difficult. But once you escape that gravity, man, it's there's no limit.
Yeah, absolutely. So let's continue on that. So you contractor, you finished at Clemson, you were a contractor, you did that full time, you started doing your single families. Were you working, or are you working full time now still? And were you working, when you started, like taking the Tim Broad's class?
So yes, I've gone through a lot of change in the last 2 years, and some scary stuff too. So 19 years old, got my builder's license. In 2016, I had built my business. I'm building a couple custom homes a year, maybe 20, 30 renovations a year, and 4 or 5 custom homes a year, doing a few million in revenue, and I'm doing okay. I'm definitely making a living, pretty good living, but I am definitely chained to that business. I mean, that business does not work without me.
Mm-hmm.
And into my life comes a company called Alair Homes. And Alair Homes is unique. You're in Houston, right?
I'm in San Antonio, Texas,
San Antonio.
but
Okay.
familiar with Houston.
Yeah, well, there's an Alair in Houston. There's Alair in San Antonio, or New Braunfels, actually. And anyways, it's a franchised construction company, and they take custom builders and they help them focus on the things that they're best at, and they take off their plate a lot of the back end marketing and processes and systems. And that really helped me, one, grow my revenue of my company, and two, it took a lot off my plate. It gave me the framework to have project managers, to take full accountability for the jobs, to have partners that could run some of the day-to-day and give me a little bit more freedom. And so over time, I grew that, and it gave me the opportunity to sell out my company, which, a residential custom construction company is pretty much worth nothing, without a multinational firm like Alair behind it. That made the value there. And so between that and my regional partnership that I owned in Alair, I was able to leverage that, sell out to my partner, and it provided a runway to go into multifamily full time. However, I still had to make that choice to leap off the cliff and do that, which was very scary, and leave everything I knew, my identity. Like, I'm a builder. I've been a builder my whole life. Like, this is what I do. It's all my friends, all my connections, everybody. And I'm going to say, and I mean, everyone was kind of like, what? Like, what are you doing? Like, but I knew that where I wanted to go was multifamily. I was really, really happy doing it. I liked the value add component. I didn't really want to deal with clients and custom homes and renovations and stuff anymore. And I saw guys building hundreds of millions of dollars in net worth in multifamily, and that is really difficult to do in residential construction. So
it's difficult to do in any job,
anything.
any W-2, building multi-millions. One can be achieved, 2, 3, if you're one of the highest performing, executives, and you're like, I've done that. I make $500,000 a year. Right. But for the mass majority of people in a W-2 job, good man, that's going to take a lifetime. Yep.
Exactly. It's like, get in an industry where even the mediocre players, even the low end players are making money. Like, I mean, we're literally buying properties that could not be run worse. I mean, nothing's been fixed in 10 years. They got 30% vacancy rate, and they're still making money. Like, it's crazy. And so if I take that and I run that thing at like 95% efficiency, I just take it up and just run it halfway decent, we're going to do very, very well. And I like that I don't have to be, the NBA star. Like, yes, the NBA MVP makes a lot of money, but 0.0001% of people make it to that level. And
you've got the Grant Cardone. It's like the hugest of the huge when we think about it. Tim Broad's is, like you said, the guy's crushing it, right? I know, definitely professional players, but if you're on the bench, if you're, I'm saying not on the bench, but if you're playing the game, rather, you're going to make some money, man. You're in there. You're getting after it. It's a good point.
Exactly. And so, yeah, with it was definitely a good move. And so back in, I guess, mid 2019, I decided to to make the jump full time into real estate. Um, excuse me.
Yeah.
So yeah.
That's good. That's good, man. That's congrats. And hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. So let's fast forward a little bit. You took some education. You learned, what you needed to do. You met and networked there at that event and found, your like a key principal or your loan guarantor or somebody to help you kind of do that. And you raised capital as well. And that was how did your maybe those first few deals, the 63 unit, the 18 unit, the 41 unit, it sounds like you were working with the same kind of team. Tell us a little bit about those deals. How'd you put them together?
Yeah, I want to touch back on what you said with the self-made.
Oh, yeah. Feel free.
I think that self-made, you can kind of do that with single family or even, running a small business, whatever. But it's like, if you're going to get into multifamily and play at the highest levels, like it's a team sport. And that's the thing that was so exciting about the Tim Bratz event it was like, wow, this guy, he could partner with me. Like he might partner with me if I find a deal that he likes and I can build his confidence that I could operate it. And I mean, I've been in construction. I know I could do the value. I could bring some value to this guy. And so the same sort of thing with my loan sponsors, Nick and Chad, they're up in Maine, and those guys poured gasoline on me and Yaden. I mean, we were willing to work. We were in a market that they wanted to be in, but without their balance sheet of a lot, and a lot of experience and the ability to, that 63 unit, it was $3.8 million purchase price and a $900,000 renovation. Like there's no way I would qualify for that loan probably for a decade. I mean, it would have taken me a long, long time to get into that world. And yet we partnered with those guys and it just supercharged everything. And so that's where, yeah, I think you can take down quadplexes, eightplexes, 10plexes. You can build your way to that. But if you can find that key principal or that person that will have faith in you and you can build that relationship, it can really pour gasoline on the fire. And there's plenty of guys in the multifamily world that if you bring them the deal, they'll partner with you. You can get a piece of that pie, but you're not going to be able to do it alone. And I think it's a fallacy to try and do it alone.
Yeah, I'm one of those individuals. Yeah, if you're listening to this and you're like, well, I found a San Antonio, Texas deal, and I think it might work. Reach out to me, and I definitely talk with you. And I'm sure Jennings is the same in your neck of the woods in Charleston, South Carolina, my friend, or anywhere in that area. I'm assuming.
Yeah.
So, yeah.
People, but they limit themselves. Say, well, I couldn't get a $5 million loan, so I'm not even going to try, or I'm not even going to look, or the same thing I think with raising money. I think raising money is a great way to break into this world where you create a sample deal package and say, I don't have anything right now, but if I did, it would look kind of like this. And this is what the returns would look like. Would you be potentially interested in that? And most people are going to say, well, yeah, I mean, sure, I'll look at the deal, or no, but I know this guy loves commercial real estate. He'd be interested, and they introduce you. And so because I see a lot of people, they look for a multifamily deal and they're trying to swing for the fences, find a 100 unit at $30,000 a door and whatever, and they can't find anything, and brokers won't call them back, and it's hard. It really is. And then they give up because they're not getting any traction. And so I think a real tangible way to get traction is start building your investor list, because same thing. If you came to me or you come to Abel and you're like, hey, I got $800,000 in soft commitments from my investors, is there a place for that in your deal? Like, probably so. I'll take $800,000 if that's you.
Let's at least have a conversation. That's for sure.
Exactly. Like,
please schedule an hour on my calendar tomorrow.
I'm gonna pick up your call. Yeah, I'm gonna pick up your call because you're a doer. You're not just a talker.
Yeah, that's awesome. So let me summarize, or kind of circle back to a couple of things that I heard from Jennings. On the point of partnership, he found a couple of individuals, it sounds like, that were loan guarantor sponsors, people that had net worth, liquidity, that helped him essentially get a loan on a property that would have taken him what he feels like 10 years to be able to qualify for. So by partnering, he sped up the time, accelerated his career, accelerated his expertise and experience. And now he has some experience. He has a track record, and his card gets punched, and he's one of the deal syndicators and creators on the opportunity. And then another thing that I heard there was, man, if you drive value to other individuals, you drive value to people that are already performing, that they're gonna be open to talking with you and partnering with you. And so, to his point, the self-made side, and it wasn't on his own. Jennings is not buying 192 units. And really, I heard from an individual, Will Crozier, that I interviewed just last week, and he had 5,000 doors. $500 million of total net worth. I don't remember the exact unit count, but he starts laughing. He goes, no one does this alone. Like, I don't do this stuff alone. Like, you see all this stuff, there's a big team behind it. And so I think that's one of the misconceptions when you buy a duplex or a quad or an 8 or 12 and you're trying to do it on your own. It just doesn't happen that way on the bigger deals, and you want to scale, and it's a team effort and team sport there. So all those good valuable points. And then on capital, so let's talk about capital raising. Some people believe, like, just like you said, I don't have all the money for this. Why would I even look at a 63 unit? Or why would I even look at that? I don't have enough money to do it. So how did you raise capital in the beginning, and maybe talk about how you raise capital today? How do you find investors?
Yeah, sure. Biggest thing is ask. A lot of people stop right there. They don't ask. But I think there's a couple of little tips that definitely make it easier. So one, you have to paint a crystal clear picture. If your investor is confused, or you don't really know all the details, you're just giving them the opportunity to say no. And people always say no to stuff that they don't understand. And if you don't fully understand the opportunity, they definitely are not going to understand it. So you've got to do your homework. You've got to know, and you've got to lay it out. Don't just come to someone and say, hey, I might have a deal, and maybe you could be an investor, and you get some and I get some, and it would work out great. Like, that's a big no, but if you're like, I got this deal, here's the split, we're going to do it, 50-50, 60-40, whatever. We're going to pay you a 10% pref. We're going to refinance it in 36 months. You're going to get these refi proceeds. You're going to retain equity. I'm going to do all the work, blah, 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 blah. This is how it's laid out. That's a lot more attractive to somebody than just a kind of a vague idea. So I think that's one thing, is be crystal clear on what's in it for me. What's in it for me being the investor. Secondly, I think you've got to take the pressure off, where people don't want to feel like you're putting them on the spot. So I do this in two ways, where one, you say, I don't have a deal right now, but here's a deal I did in the past, or here's a deal that we were looking at, it went under contract with somebody else, whatever it is. And you download an offering memorandum off the MLS and make up a deal package, just whatever. It doesn't really matter. Just create a deal package of something that you would like to buy. Then you can go through your pitch with the investor, and there's no pressure, because it's not really a live deal. Plus, you're not violating SEC rules, because if you don't have a pre-existing relationship with them, you cannot pitch people on your deal if you don't have a pre-existing relationship, unless it's a 506C, which you probably aren't doing. But anyways, the but that, or you say, hey, do you know anybody that would be interested in something like this? We're trying to target 13 to 18% returns, but the minimum investment is 50 grand. It's commercial real estate, it's multifamily. Do you know anybody that'd be interested in that? You're hoping they'll say, well, maybe I'd be interested. But if they don't, maybe they know someone that's interested. That's another way to take the pressure off them of, hey, do you have any money for me for my deal? Like, I want you to give me money right now. Like, that's just way too direct. So you don't have a deal right now. Maybe this isn't for you, but maybe you know someone that is interested in this, or we have deals coming up all the time, but we just don't have anything. This is already full. Even if you have a deal, always in the first meeting, tell them that you don't have a deal, and then even if it's a week or two later that you come back, hey, we got something now. Like, it creates that psychological fear of missing out, versus the desperation of, I need a deal. You got to have a ton of options. You got to have a ton of networking and contacts. Because even the people that say they will invest with you, some of them won't. When it comes down to crunch, they're not going to wire the money. So you got to have raised for what you need.
Yep. Yeah, absolutely. And you put some deals together with seller financing. I think I remember you talking about it once or twice, right? What maybe give the new general partners or people that are trying to figure out how to break into multifamily, somebody just like you, what advice do you give them, or how can you help them get, find an owner finance and then do an owner finance, and maybe explain a little bit what it is, what you did?
Yeah. So owner financing is very powerful. There's a couple reasons to do it. One is you can't get a loan. You're not credit worthy, or you don't have the net worth or whatever. So if the owner believes in you, then he can just grant you a mortgage. And that's about all the qualifying there is. I'm not a huge proponent of that, because it doesn't really help you. The owner's still going to want you to put down 30% or 25%. So it's like you're still going to have that big outlay of cash. Yes, maybe it's easier than working with a conventional bank, but it's not a gigantic benefit. However, if you can get the seller to hold a portion of your down payment and you're doing a conventional loan, so if you can't get the conventional loan on your own, then bam, find somebody that can. Partner with them. Give them a piece of the deal and get into the banking world. Like, you will not be successful in multifamily if you do not start working with banks and figuring out how to do that. Like, you've got to get comfortable with that, and you've got to get over that. But working with the seller to hold 10%, 15% of a 25% down payment is huge. I mean, that will boost your returns. That will allow you to pay a little bit more for the asset, possibly. There are even structures where some banks will allow the seller to carry the entire down payment. That's more like a local bank level, and you should ask before you do that, because a lot of banks are not comfortable with that. Mm-hmm. But if you can find banks that are, which I have, and I get the seller to hold, for example, the bank was willing to loan 80% on a self-storage deal. And I wrote up a download about this that you can download for free. But they were willing to load 80% of the purchase price, and the seller carried 25%. So now I have 105% in financing on a $1.2 million purchase. And when I looked at the numbers, if I was going to raise capital and do it and meet my criteria, I could only pay $900,000 for this asset. However, with this model, it's still cash flowed at the seller's asking price of 1.2. And so I bought it for 1.2, and at closing, we get 5%, which is about $60,000. So we get $60,000 in working capital to kind of kick the project off. We're cash flowing. Property's collecting $9,500 a month right now, and we can bring that to $15,000. The seller has added some parking spaces. There's some value add component to that. And so it really made a lot of sense to essentially get a building for free with no partners, no investors, there is a bank involved to bring, $800,000 in cash to the table at closing. and the seller it's not a second, it's just a promissory note. So it's not a second mortgage.
Yeah,
So,
that's awesome. How many units was that? Which property was that?
it's 176 units, or 176 of self-storage, not multifamily.
Yeah. Okay. Yeah. So for those listening, individuals like Jennings and other syndicators like self-storage, right? Because it models the same tenants or components that multifamily does, which is scale, number of doors, cash flow, NOI, the same components or tenants there. And then there's no there's no plumbing. You don't have to worry about kitchens or restrooms, and turnaround's easier when someone moves out and in, right? But essentially the same mechanics. You buy them for tax reduction, for cash flow, for forced appreciation on the NOI, and you figure out how to increase the value of the property. So that storage unit, if I heard this right, there was no investors that you have to pay back a 15% or credit card interest rate times on, right? So you and I don't know if it was a partner or your own.
Yeah,
You own.
I am partnering with my Yaden, my business partner,
Okay.
who's been with me since the beginning.
Yeah, and you guys are still the lion's share. Forget about the lion's share. You're the whole share, the whole piece of the pie, which is way better. Now investor relations is minimized because it's you guys, and then all the profit. Everything cash flow after that is you. The seller helped you with some of that down payment, which meant you got cash at closing as opposed to you pay something down. Did I hear that last part right?
That's right. And he's paying for half the closing costs. I'm paying for half the closing costs, but I also
and he even paid for half of the closing costs. Man, what a negotiator, bro. That's awesome.
Yeah, it was a good deal, and it was a good deal for him too, because I didn't negotiate with him on his price. I was like, "What do you
full
want?"
pop, and
he's like, "I want 1.2." All right,
done. Here's a way to do it. Here's a way to do it.
If you can give me my terms, and that's important, I think, to broach with a seller, because it's additional risk for sellers. So we're here talking about how great it is, but
on our side,
to actually get one of those deals is not so easy. And I think you have to be very careful. You just have to approach it the right way, where it's like, hey, listen, if I did it my traditional way and I just paid you cash straight up, I could only pay you 800,000, 900,000. And I know that probably is not attractive to you. No, I can't take that. Well, if I could pay you full price, but you'd have to work with me on some terms, would you be open to that? Well, yeah. Well, I mean, what do you mean? Well, I mean, I'd bring you a lot of cash, as much cash as possible at closing, 800,000. But the last 300,000, you'd have to hold in a seller mortgage from me, not forever, not for like 30 years, but just for let me stabilize the property and refinance it. I think I can do it in 2 to 3 years. Would you be open to that? Write it up. They almost always are just like, well, let's put it on paper. And then I give myself 2 to 3 years with an option to extend for another 2 years at a fee of 1% to give myself, if I give myself 5 years, because when you're overpaying, you got to think to refinance and keep no cash in the deal, you got to have some cushion there. So you may need time. You don't want to do it on a 12-month term or 24-month term. You got to give yourself 3 to 5 years. Sometimes I'll even negotiate 10 years to get them out. But that works. And then, especially for off-market stuff where they're not getting other offers and they're like, they have it in their head what they want, and it still has to cash flow. Like you don't want to get into an upside down where the asset's costing you money every month. But if it's breaking even, if it's making a few $1,000s a month, go for it. Why would you not control another multi-million-dollar piece of real estate?
Yeah. And really, from the seller's point of view, there's something called capital gains taxes, and real estate investors have to deal with it. And he records on his books, not the 1.2, in 2019 or whatever year it was, he shows 800 grand. So it reduces or allows him to spread out his capital gains taxes on his books over some period of time, which is a lot of times easier to handle and deal with. If his basis was 500 some years ago, then he's got to pay the piper. IRS wants their capital gains taxes, but if he only shows 800 today, then he's only got to pay taxes on the 300 difference, the 5 and the 8. And, as Jennings pays him over time, he'll have to pay it eventually, but it allows the seller to kind of stretch that out and maybe allow him to maneuver without, a specific 1031 or whatever. He can invest in maybe one of Jennings' deals and get some accelerated appreciation now that he's got a good relationship with him. So, there's a lot of benefits to that. And this has been awesome. And I don't want to go over time, Jennings. I appreciate all your valuable time. Before we go, how do investors or future partners, how do we get in your world? Where do I reach out to you? What's the easiest way to stay in contact if I want to, talk to you about a future investment or potentially partner or find a deal, whatever?
Absolutely. I mean, I think the best way, I'm pretty active on Facebook, Jennings Smith, and I've got a public profile. So yeah, hit me up on Facebook. My email is jennings@rentliveoak.com. And I'm pretty active in a few of those Facebook groups, the Magic of Multifamily. I'm in there a lot. I'm posting my free downloads. I've got a 5-minute deal analyzer, like how to analyze a multifamily in 5 minutes. Not a complete analysis, but like, do I want to proceed? Does this fit my criteria? How to do no money down deals, how I raised my first $90,000 for my 12-unit apartment. I also have a download of like my 34-unit offering memorandum. Like, this is my pitch deck that I use to close a 34 unit. So all that stuff I give away. I'm happy to help people. I really like to, and because I like people to want to partner with me, find deals, invest in my deals, just build relationships and build my network.
That's awesome. So that's great, Jennings. I appreciate the time. Is there anything we didn't talk about before you go that you really wanted to highlight? Any last nuggets, any bits of wisdom, anything in general, man? And don't worry about time. We can go as long as you want to at this end.
I think that a big problem that I see, like I love to see people successful and winning and making it happen. But the fact is, like 90 to 95% of people don't. And I've seen in my own life and in people that I coach and work with and whatever, is they're looking for their big break. They're looking for like a huge opportunity to come across their desk, and it'll just be so obvious. And it doesn't come. Like it will not come. I'm telling you right now that is not coming. So the best way to get in this game, the best way to do it is to just start. Like, start by dedicating 15, 30 minutes a day to not just watching podcasts and reading books. Like, that's fine. You got to get the knowledge base. That's a given. But most people out there, it's like, enough. Like, enough. Now go pick up the phone. Go drive for dollars. Go set up your first meeting with the investor. Like, go pick up the phone and talk to the loan sponsor, the rich guy that could help you achieve your goals, and stop being so scared of what people think. And that was just huge for me. I mean, like, I was scared to raise money. I was scared to talk to brokers. I was scared to even spend $5,000 to go to Commercial Empire. I felt like a fool. Like, who spends $5,000 to go to a 2-day conference? But like, literally, the relationships made there have made me millions of dollars. And so it's just taking action a little bit at a time. It will compound, and then those massive opportunities, they will come across your plate, but they're not going to just come out of the blue. They're going to come when you're ready for them.
Yep. That's some great nuggets, man. You're going to help some people, that's for sure. Provide some value. I know I've learned a good amount, so I appreciate your time, and look forward to staying in contact, my friend.
Yeah, thanks, Abel. It's a real honor to be on this podcast. I appreciate it.
Yep. Yes, sir. And Abel Pacheco, again, signing off. We're the 5 Talents Commercial Real Estate, 5 Talents podcast. If you want to reach out and learn a little bit more about multifamily investing, how to create financial freedom through passive investing, or want to talk about a future partnership, just reach out to me at 5tcre.com. That's 5tcre.com, and look forward to having you. Also, we've got an ebook, The Investor's Guide, or Path to Financial Freedom. So if you guys want to download, I'm you can register now, get the ebook, and I'll send it out to you as soon as it's available for you. All right. Thank you very much. Appreciate it, Jennings. Man, great show. Thank you.
All righty. Thanks. See ya.
Bye, guys. Thank you for listening to this episode of the 5 Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents Podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents Podcast.